Hello, traders. Gary Wagner here. It is Tuesday, the 14th day of June, approximately noon here in Honolulu, Hawaii, and this is the daily report for gold. In the evening session, we do have gold trading quietly, unchanged to up 20 cents. It was up $8 to $9 higher as we finished up the morning session. And as you can see, the market is trading back to that 124, 125 area. We are looking at a 180-minute chart. And as you can see, it does appear, at least as though on a tentative basis, I've created a trend line. And really what I've done is I've fixed it on 2 points, 2 lows, right in here and right in here. And as you can see, when this market did begin to trade higher and then came down, it absolutely seems as though it did find support right in this area, right around 1518, 1519. And that was the low that we got in yesterday. Of course, we did pull a trigger when our stop got hit. We pulled some profits. And what I was looking to do is to really see if the market was going to be able to sustain the rally as it came down, where it was going to find support. And I certainly wanted to protect ourselves because we had quite a nice trade there. I didn't want to give up the $38, $40 in terms of profit that we had. We worked much too hard to get that. Now that the market has settled down, though, and we are looking at a scenario where I really believe that we have at least found some support in this area, it does appear as though it might be wise for us to re-enter. And what I'm going to recommend is that we re-enter this again into 2 positions. We can take one on now at the market and then take another position either on a breakout to the upside or to dollar cost average if the markets are going to move against us. Now, in terms of a stop placement itself, the recent lows have been around 18. These lows here, of course, this is I believe 61 and 71, those 2 lows right in here. So in terms of it making sense, I'm going to recommend that we place our stops below 1500. I haven't seen it hit in this area. So right around 1498 on a protective stop. That's going to protect us right in this area. And we will take a stab at the market from the long side. Now, when we take a look at our daily chart, we did receive a candlestick pattern today, and that is a candlestick pattern called a piercing line. The piercing line, of course, is a 2-day pattern. That would be right in here. And what we typically do on that is we need to wait for confirmation. And therefore, I did wait till we had the afternoon session, and now we've got the beginning of another up candle. And that's why this report is coming out a little bit later today than typical, is that I wanted to see how the market really opened up after the break and to see if there was going to be some carry through, some follow through in the market. But as you can see, this is a very nice 2-day pattern. This is a piercing line. It's absolutely coming after the market has sold off a little bit. And then in terms of our count, when we consider our basic count, what we are looking at right now is the fact that we are, of course, in 5 here, and I'm expecting that to be a 5 count. So we got our 1, our 2, and now we are in wave 3. We are currently in wave 3, right in here, and that should be a 5 count. In other words, 1, 2, 3, 4, 5. Now, the other thing that I feel comfortable about when we look at this market is that when we consider the fact that we had our 38% level, that was that 1518, you can see some lows just right around there. But at the same time, it does seem as though we got some real support in that area. Now, when we convert our daily chart into the Henkin Ashi, of course, is our average chart, you can see that although this candle is just forming, these body sizes here, this one got smaller, but what we do want to see is that turnaround candle, the consolidation candle. I can see that right here. And then if we're going to get follow through, obviously it's going to begin to go green as we go back in. Another way, of course, to look at this count too is on these Henkin. You get this 1, 2, and then as I said, my belief is we are now going to enter wave 3 within the minor count. There's the minor count here. This, of course, is our intermediate count, and then our major count here. Now, also, in terms of a target area, In other words, where we think that this market has a potential to move on this particular third wave, what I'm going to do, of course, is to look at our wave one, because wave one is always going to be our benchmark. If we then take that range and then move that to the beginning, let's say, of wave three, we will find a potential target, and this, of course, would be based upon the fact that wave three here is going to be equal to, if not greater than, wave one. And as you can see, that takes us just shy of $1,600 an ounce. Of course, what I would expect at that point is some sort of a consolidation and a pullback. That would be our final wave four. And then our wave five, as I said, should propel us to about 1608. That's my initial target. So once again, traders, go ahead, enter the market on the long side. Stops at 1498. This has been Gary Wagner, wishing you, as always, good trading. And we'll talk to you tomorrow for another daily update and review. By the way, I will be doing a live webinar tomorrow, 4:15 Eastern Standard Time. Included in the email is a link to attend. Hope to see all of you there. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange